Hey, hello. This is Jack Tubbs from the J Team at Realty One in Surprise, Arizona, wishing you a fantastic Friday, and I hope you have an awesome weekend. Going to be a little bit cooler, but it's going to be still a great time to be outside with friends and family and enjoy some of the beautiful sunshine that we experience almost every day here in the Valley in Phoenix, Arizona. Hey, just to want to finish up what I started on Tuesday about an FHA 203K loan. Today I want to talk about what does it take to qualify, what are some of the upsides, and what are the downsides. First off, who qualifies for a 203K loan? Well, number one, generally, almost anybody can qualify. The minimum is a 580 credit score, though some lenders, depending on who you're working with, will require between 620 and 640, at least a 3.5%, 3.5% or 3.5% down payment, and that's going to be based on not only a purchase price, but also the repair cost. So if it's a $100,000 home, $3,500 would be your 3.5% down payment. But if we're going to add $35,000 in the repair cost, it's going to be more than that. So realize that when we're talking about qualifying for this, that it not only is the purchase price that you have to have the down payment for, but also you have to add the estimated price of the repairs or the upgrades that you want to do. What are some of the downsides? Really, there are none. The only thing is that because it's an FHA program, your payment will be slightly higher because since you're only putting 3.5% down, they're going to charge you private mortgage insurance, PMI, and that's based on a percentage of your loan. So you'd have to check with the lender or how much that's going to be, but that is definitely going to add to your payment. So your payment is going to be higher until you have gotten to the point where you have 20% equity in the property, which will happen pretty quickly with a 203K loan, because a lot of times when we do repairs, and in the market we're in right now, as it's gaining value so quickly, and now those repairs are going to actually gain more value than probably what you're going to pay to actually do an appraisal. Probably after the first year or 2 years, you might be very close to having 20% equity. Then you can refinance, drop the PMI, and your payment should come in line. But one of the advantages is that you'll be able to buy a house that's a fixer-upper, and you'll have probably most, if not all, the money to repair the different things that you want to do in the house. And what's even cooler about that is you put your own thumbprint on the home that you're buying. You don't have to take on somebody else's design work or kitchen design or whatever. You get to do it all by yourself. You get to, as I said before, put your thumbprint on the house, which makes this a real cool program. But other than that, there's not a lot other to share about this program. It's a great program. Fannie Mae and Freddie Mac both have 203K programs, and also you can find some conventional programs that will do the same thing, as long as the home is conforming. It can't be a non-conforming loan, which means it's got to be a livable home. Basically, that's wrapped up what conforming is in a nutshell. And it has to be a single family residence or up to a four family residence, depending on the restrictions that a lender is going to impose upon you, depending on what their loan product is. But anyways, an FHA 203K, excellent loan, great for you. Like I said, minimum required by the FHA is a 580, but you're going to find most lenders are going to be like a 620 to 640 is going to be their minimum. They're going to of course, want you to be able to have a debt to income ratio that is going to be show that it's comfortable for you to make the payments on the loan. 3.5% down, but that includes the estimated cost of the repairs that are going to be done to the house. So it's not just going to be based on the purchase price. The only downside is that because it is an FHA product, they add PMI, private mortgage insurance, in to your payment until you have 20%. And actually, with all FHA products now, it's for the entire life of the mortgage. So that's why I say that in the first year or maybe 2 years that you get an appraisal done, especially in the market where we see values continue to rise at such a rapid rate, you could get to 20% very, very quickly. Then you can refinance and drop that PMI and then have a payment that's more in line with what your neighbors are paying around the neighborhood. Hey, if you have any questions or if you'd like to even see some properties that would fit into the 203 program, hey, please don't hesitate to call. You can get a hold of me direct at 248-330-7972. That's 248-330-7972. Or you can email me, Jack at thejteam.house. That's JACK at THE, the letter J, TEAM.house, or you can call the office and talk to any of my team members at 623-252-4061. That's 623-252-4061. Hey, this is Jack Tubbs from the J Team at Realty One in Surprise, Arizona, wishing you a fantastic weekend. Get out there, enjoy this weather, get some sunshine. Hey, and just play it safe. Make sure you mask and socially distance. We want to get this coronavirus out of our lives. So have a great weekend. I'll be seeing you Monday with more about what's going on in the Phoenix real estate market. Have a great weekend. Bye-bye.